This is Eric Mwatha with Mwatha.com. So what we have here, this is going into the options expiration Friday and onto the what seems like the last full trading week of February 2012. We see here this being February the 17th, 2012. We see that the Dow is inching its way to 3-year highs, something like that, 52-week highs, and it's been gradual. You see the market, ever since we hit this low here in October and reverse closed higher for the day somewhere here, you see that we are pushing higher, and we've been on a straight, almost a straight upward trend ever since we hit 2012, January 2012 right here. This market's been pushing higher. Now we see intraday at new highs. Let's see. This is now being the Dow. Let's take a look at the Dow from a monthly chart, and what you see is that it is breaking out above 12,810, which is the prior monthly close, May of 20. This goes back to 2011, so we are breaking out, and this is very close to a 3-year high, very close to a 3-year high on the Dow as far as the monthly chart is concerned. A very powerful move, and as long as the market is pushing these levels and moving higher, there's really nothing wrong in the market. And you really, as a trader, you have to play quality stocks that are breaking out. This is there's nothing wrong with this chart here. This looks powerful, and there's no need in trying to predict the high, because at the end of the day, that's a very tough job to do. The market will tell us when it's exhausted its run. This is a S&P 500. It's trying to break out on a weekly basis. The former weekly closing high was sometime in May of 2011, and the weekly closing high was 1363. So we are very close right now, trading at about 1361, give or take. But at the end of the day, again, another constructive move, and you can see all this began when we had the crossing over of the 13-week moving average and the 33-week moving average. This crossover has led to this bullish run, just like it led to a bullish run here when we had a crossover September of 2010. We had a nice move in the market, and also another crossover here to the upside. So the market moved from July all the way to about April of 2011, from July of 09 to April of 2010. So these crossovers are gonna play a part in this video, but you see this crossover in the market and has led to a nice run on the S&P 500. The Dow Transports, I talked about the fact that they were, we were trading in this narrow range here, and we broke down. Seemed like we were starting to have a bearish setup here, but at the very least, we see that it's bouncing very close to its 50-day moving average. So this trend in the Dow Transports is not necessarily broken. I think it's still gonna move higher, even though it was one of the markets that was pulling back. So the Dow Transport not necessarily giving us a sell signal, but we'll monitor it. For now, it seems like a nice, decent pullback. QQQ breaking out on a weekly chart, and this is gonna be week number 1, 2, 3, 4, 5 straight weeks. 5 straight weeks, believe it or not, after breaking out above 59.32. Very strong breakout. Any pullback initially is gonna be shallow, unless we have a disastrous move. But this is such a strong breakout. It broke out and followed through for the next 4 weeks. That's a powerful breakout. Usually when you see that, the market is trying to set up for a multi-year, multi-month rally. Even with pullbacks, this rally seems to have a lot of strength. This is the NASDAQ 100, and you see again, like I've been showing, this is a follow-through month after it broke out into what seems like an 11-year high. A very powerful looking chart here. There's really no need to be bearish in the market right now, since there's a lot of positive things going on. The banking index, we see that now we have the possibility of a crossover between the 50-day moving average and a declining 200-day moving average. So we'll see what happens here. But even as of the last couple of trading days, we see that it's trying to push to multi-month highs, even though it's not the leading sector in the market. But you see it's trying to, recapture some lost ground. It's not as powerful as other sectors in the market, because you can see the highs on the banking index are way out there. We have a long way to go before this banking index can see new highs. So this one is where I say don't put too much emphasis on your portfolio in the financial space. You want to go with leadership in the market. The BTK, which is a biotech index, you see that it is struggling to hold this level here, which we've been talking about, which was a former break point here. Market came back and has been playing around at this level here. If it can't hold and pulls back, that might be a short-term sell signal as far as the biotech space is concerned. Let's take a look at the healthcare iShares, or the ETF, the IYH, which is breaking out to all-time highs on the monthly chart. Very strong monthly breakout. Nothing wrong with this chart. As long as it's breaking out, you gotta play the breakouts. Find stocks in this sector because this is a very strong looking chart as of right now. Now there's no need in us trying to figure out when the market is gonna peak, but all we can do is try and follow the strongest trend. The strongest trend right now is to the upside. This is the insurance index. Again, unlike the banking index, you see the insurance index is breaking out to all-time highs on the monthly chart. Very powerful looking chart. Let's take a look at now you see that the IYR, which is a ETF that tracks the real estate market, it is struggling to break out right now. We'll see how it holds, but 60.93 was the former monthly close going back to 2011. Let's see whether we can break out, but struggling right now. The XHB seems to be pulling in what seems like a 2.5-year high on a monthly chart. This is a monthly chart for the XHB Home Builders Index. Nothing wrong with this chart. Also seems to be making multi-year highs. You want to play that trend until the trend reverses itself. This is the dollar as observed by the UUP. I talked about the fact that the dollar seems to be finding strength or support somewhere around here on the price. It's been bouncing off this level here, right here, and seems to be holding. Also, if we take a look at the RSI, see that the RSI for the dollar is also showing a bounce possibility on this line here. So the dollar to me might be indicating that it wants to recapture this recent drop, but that might suggest weakness in the commodity space. Again, that remains to be seen. Gold still struggling, but necessarily I think gold is in no man's land right here, trading above the 200-day moving average and trading above a declining 50-day moving average. So declining 50, upward trending 200-day moving average. I would say gold needs to either break out above this. Let me see if I can show that properly. To me, gold is in no man's land. I would like to be probably look into buying if it breaks out above that declining top lines. For now, I don't know what gold is trying to do. I'm gonna wait for some more data. This is a retail space, and what you see here is a powerful all-time breakout high, all-time high as far as the S&P 500 XRT retail index. This is a powerful looking chart. There's nothing, there's no need to suspect that this one is going to pull back until it does. For now, you might want to find some ideas in the retail space as to be part of your portfolio. The SMH, which is a semiconductor ETF, you see this one is also pushing almost 10-year high right here. 10-year high, close to 10-year high, breaking out on a monthly chart. Again, semiconductors might be trying to push higher. Again, that might play into the technology space, which is where you find the Nasdaq doing very well. If you take a look at the VIX, the VIX is struggling now after it had a nice second week of February rally, struggling to hold above the 10-week moving average. So to me, the VIX is going to continue being under pressure, which might be consistent with a market that wants to move higher. If you take a look at the USO, we see that the USO is now trying to break out on a weekly chart above 39.22. 39.22 was the highest close first week of January 2012. So it's trying to move out, but we are still struggling to hold above this level here, which is this line here, which it's been having a lot of trouble closing above that. So we'll see, seems positive here. I think this one is probably gonna be, we've had a couple of failed breakouts in this area here, but the most recent move this week, the options expiration week, tells me that this might be one that takes this market higher. We'll see how these things play out. We also see that the RSI is trying to break out here. If you take a look at the blue line here, which is the RSI highs, seems to want to be breaking out here. We'll see how things shape out in the coming weeks, but for now I think USO, the crude oil space, might be trying to break out also. The German market, what I wanted to point out here is a series of world markets that are showing crossovers between the 10-week moving average and the 33-week moving average, the last one being in 2009, and we had this nice move. So this crossover here led to this multi-month rally. We're seeing another crossover here, so which means even pullbacks could just be buying opportunities in the coming weeks. The Hong Kong market, you see the Hang Seng, again another crossover between the 10-week moving average and the 33-week moving average. A very powerful indicator. Again, the last time we had a crossover like that was here, and the other one was here. Each time we had multi-week rallies in the market. The FTSE, again another world market showing a crossover between the 10-week moving average and the 33-week moving average, which is bullish. The KOSPI, the Korean market, again another market showing crossover between the 10-week moving average and the 33-week moving average, which is net positive. Let's take a look at the Japanese market, which you see that this last couple of days has seen this market move above the 200-day moving average, right there above the 200-day moving average, and also above the declining price channel. So this here could be where it starts building and moves higher in the coming weeks, in the coming months. So even the Japanese market is showing signs of life. This is the Indian market, the Bombay Sensex, and you see it also showing signs of a crossover between the 10-week moving average and the 33-week moving average, which is net positive. The last time we had a crossover was in 2009, and we had a multi-month rally. So this crossover here, even with pullbacks, might suggest a market that wants to move higher in the coming weeks, in the coming months. Again, just to end this video, like last week's video, you see that the Dow is holding at multi-year highs. As long as the price on the Dow remains above 12,810, this market is going to be urging us to go long and to stay long and to find quality breakouts in quality sectors of the market that are breaking out, leadership sectors. This is Eric Muathe, themuathe.com. Again, market seems strong. There's no point to be bearish when there's really not a lot to be bearish about. This market is strong. We could be setting up for a market that wants to go higher for a long while. And until we get more data that tells us the market wants to go down, we need to play market that wants to rally. Eric Muathe with muathe.com. Peace and blessings.